The year 2024 finds the real estate market at a pivotal juncture. After years of rapid price appreciation and historically low mortgage rates, a sense of equilibrium is emerging. This period of adjustment presents both opportunities and challenges for buyers, sellers, and investors alike. The COVID-19 pandemic triggered unprecedented volatility in the housing market. Lockdowns and remote work fueled a surge in demand, particularly in suburban and rural areas. This demand, coupled with limited supply, led to soaring home prices and bidding wars. As we move further away from the peak of the pandemic, the market is finding a new normal. Interest rate hikes by the Federal Reserve aimed at curbing inflation have cooled demand to some extent. However, inventory remains tight in many markets, providing ongoing support for prices. In New Jersey, the market dynamics are particularly interesting. The state has seen a significant shift in buyer preferences, with increased interest in suburban areas like Montclair and Princeton. Understanding the forces at play in the current market is crucial for making informed real estate decisions. Whether you're a first-time home buyer, a seasoned investor, or simply curious about the future of housing, this analysis will provide valuable insights to guide your thinking. Several key trends are shaping the real estate landscape in New Jersey in 2024. One prominent trend is the rise of remote work. While many companies are calling employees back to the office, a significant portion of the workforce continues to enjoy the flexibility of working from home. This trend is reshaping housing preferences in New Jersey as buyers prioritize home offices, larger living spaces, and proximity to outdoor amenities. Another important trend is the increasing cost of borrowing. The Federal Reserve's efforts to combat inflation have led to higher interest rates, making mortgages more expensive. This has dampened demand somewhat, particularly among first-time home buyers in New Jersey, who are most sensitive to interest rate changes. Inventory levels remain a critical factor in the market. While new construction is slowly increasing, it has not kept pace with demand. This supply-demand imbalance continues to put upward pressure on prices, although the pace of appreciation has moderated from the frenzied level seen in recent years. Demographics also play a role in shaping the housing market. Millennials, now the largest generation in U.S. history, are entering their prime home buying years. This demographic wave is expected to support demand for housing in New Jersey in the coming years, even as affordability challenges persist. The direction of interest rates is a key determinant of mortgage rates and consequently housing market activity, including in New Jersey. The Federal Reserve faces the delicate task of taming inflation without triggering a recession. Inflation, while moderating, remains above the Federal Reserve's 2% target. Supply chain disruptions, geopolitical uncertainty, and strong consumer demand have all contributed to rising prices. To combat inflation, the Federal Reserve has been raising interest rates, which makes it more expensive to borrow money and helps slow economic growth. However, raising interest rates too aggressively could push the economy into a recession. The Federal Reserve must strike a balance between controlling inflation and supporting economic growth. This balancing act will have significant implications for mortgage rates in 2024 and beyond, especially in states like New Jersey. Market participants closely watch economic data releases such as inflation reports and employment figures for clues about the Federal Reserve's next move. Unexpectedly high inflation readings could lead to more aggressive interest rate hikes, while signs of economic weakness could prompt the Federal Reserve to pause or even reverse course. Mortgage rates are expected to remain elevated in 2024, but the outlook varies depending on the type of property and location, especially in New Jersey. Residential mortgage rates in New Jersey are likely to be more sensitive to changes in interest rates set by the Federal Reserve, while commercial mortgage rates are more influenced by market forces and risk appetite. For residential mortgages in New Jersey, the average 30-year fixed-rate mortgage is projected to hover around projected rate of just percent in 2024. This is significantly higher than the historically low rate seen in recent years, but still below the long-term average. Borrowers with excellent credit and a low debt-to-income ratio can expect to qualify for the most favorable rates. Commercial mortgage rates in New Jersey are influenced by a wider range of factors, including property type, location, tenant mix, and the financial strength of the borrower. In general, commercial mortgage rates are expected to be higher than residential rates due to the perceived higher risk. However, well-located properties with strong income potential in New Jersey can still attract competitive financing terms. Section 5, the rental landscape, urban versus suburban dynamics in New Jersey. The rental market in New Jersey is also undergoing a period of adjustment. After experiencing a surge in demand during the pandemic, rental growth has moderated in many parts of the state. However, rental rates remain high, particularly in major metropolitan areas like Newark and Jersey City. The urban exodus that began during the pandemic has slowed but not reversed in New Jersey. Many renters who fled to the suburbs and beyond in search of more space and affordability are choosing to stay put. This has led to increased demand and higher rents in suburban and exurban areas like Bergen County and Morris County. In urban centers, the rental market is more nuanced. While some renters have returned to cities like Hoboken, others remain hesitant due to concerns about crime, high costs of living, and the availability of amenities. As a result, rental growth in urban areas has been uneven, with some neighborhoods experiencing strong demand while others lag. The availability of affordable housing remains a pressing issue in many parts of New Jersey. Rising rents and stagnant wages are making it increasingly difficult for renters to make ends meet. Policymakers are exploring various solutions such as rent control and increased funding for affordable housing development, but addressing this challenge will require a multifaceted approach. Section 6, New Jersey Rent Predictions, Affordability Challenges and Opportunities. Rent predictions for 2025 in New Jersey vary depending on local market conditions. However, several trends are likely to influence rental rates across the state. One key factor is population growth. Cities in New Jersey that continue to attract new residents, particularly young professionals, are likely to see continued demand for rental housing, which could put upward pressure on rents. Conversely, cities in New Jersey experiencing population decline may see rental rates soften. The strength of the local economy is another important consideration. Cities in New Jersey with robust job markets and a diverse range of industries are better positioned to weather economic downturns and maintain strong rental demand. On the other hand, cities in New Jersey heavily reliant on a single industry or facing economic headwinds may see rental rates stagnate or decline. The availability of new housing supply also plays a role. Cities in New Jersey that are actively building new apartment buildings and other rental units may be able to keep pace with demand and moderate rent increases. However, cities in New Jersey facing regulatory hurdles or community opposition to new development may see rents rise more rapidly. Section 7. Investing in uncertain times. Strategies for success. Investing in real estate can be a rewarding but challenging endeavor, particularly in times of economic uncertainty. However, by adopting a disciplined approach and carefully considering market conditions, investors can position themselves for success. One key strategy is to focus on properties with strong fundamentals. This includes factors such as location, property condition, tenant quality for rental properties, and potential for appreciation. In New Jersey, properties in desirable neighborhoods with good schools, low crime rates, and access to amenities tend to hold their value well over time. Another important consideration is cash flow. Investors should carefully analyze rental income and expenses to ensure that the property generates positive cash flow. This is especially important in a rising interest rate environment, as higher mortgage payment can eat into profits. Diversification is also crucial for managing risk. Investors should consider diversifying their real estate holdings by property type, location, and tenant mix. In New Jersey, this helps mitigate the impact of any single market downturn or unforeseen event. Section 8. The future of homeownership, adapting to evolving trends. The concept of homeownership is evolving as societal trends and economic conditions shift. The traditional model of buying a single-family home with a 30-year mortgage is no longer attainable or desirable for everyone. Rising housing costs, particularly in major metropolitan areas like New Jersey, are making it increasingly difficult for first-time home buyers to enter the market. This has led to a growing trend of delayed home ownership, with many young adults choosing to rent for longer periods or exploring alternative living arrangements. The rise of remote work is also reshaping housing preferences. With the ability to work from anywhere, some home buyers are prioritizing location flexibility over proximity to urban centers. This has led to increased demand for homes in suburban and rural areas, as well as vacation destinations, including the Jersey Shore. Technological advancements are also transforming the home buying and selling process. Online real estate platforms, virtual tours, and digital mortgage applications are making it easier and more convenient for consumers to navigate the market, especially in competitive areas like New Jersey. Section 9. Conclusion. Embracing the evolving real estate landscape in New Jersey. The real estate market in New Jersey is constantly evolving, influenced by a complex interplay of economic, demographic, and societal factors. While predicting the future with certainty is impossible, understanding current trends and potential risks in New Jersey can help individuals make informed decisions. Whether you are a seasoned investor or a first-time home buyer, it is essential to approach the New Jersey market with a long-term perspective. Real estate is a cyclical industry, and what goes up must eventually come down. However, over the long run, real estate in New Jersey has historically been a reliable store of value and a hedge against inflation. By staying informed, adapting to changing market conditions, and seeking professional guidance when needed, individuals can navigate the complexities of the New Jersey real estate market and achieve their financial goals.